Thank you very much. Really like to thank all of you for attending. I think you'll find this an interesting presentation. Strategic Metals, as I've said, is a project generator. I'm sure most people understand that, but most of the talks you're going to see here today are talking about deposits that have been found and are advancing toward development. Our strategy is a little bit different. Somebody has to feed the system. Somebody has to make the early stage discoveries. Well, that's our role. I think we've been more successful than most of our competitors in that regard. We've been able to build up very substantial cash reserves, and I think that with the projects we have in hand now, we're really poised to go forward into this strong market. So again, forward-looking statements, I'm sure we're all familiar with those. Okay, why would you invest in strategic metals? There's a number of good reasons. First, we like to think we're quite innovative. We come up with different ways of doing deals. We have to be creative to stay abreast of changes in the market. We're very well funded. We built up about $38 million in working capital. Of that, over $20 million is completely unallocated cash. Our burn rate is one of the lowest in industries. It costs us about $500,000 to $700,000 per year for administrative overhead. That's a tiny fraction of most of our competitors. Secondly, we trade at a major discount. We're a great value at the current market. We've come up off the bottoms, but still much below our previous peaks. We're trading at about 15% discount to our market cap is about 15% below our working capital position. No valuation whatsoever for the shares, for the projects that we have. Third, we have a very large and diverse portfolio of shareholdings in other companies. They're working in a number of jurisdictions, gives us huge leverage on their success. Our investments in the other companies are strictly investments. We're not looking to manage and control those companies. We're looking to capitalize on their efforts and sell those shares when it's appropriate. And finally, we've got a pipeline of wholly owned projects that we use for options and sales. And through that, we net either cash, shares in other companies, and we generally retain royalty interests. We've been very successful in converting our royalty interest to cash as well. We had one transaction a few years ago where we sold 4 royalties for $30 million. Okay, I won't spend a lot of time on the management, but suffice to say that we have a lot of experience and varied experience. Every one of our directors and officers has been involved with juniors for a number of years. We have good geologists on staff and in management. We have lawyers, we have accountants, and we have people with financial expertise. As was mentioned, I've been with Archer Cathro since 1971. Archer Cathro is a consulting group. We're independent to strategic and other companies that we do work for, but we have a very, very close association with Strategic Metals. We act as a project generator for them. We provide access at no cost to the company to our proprietary databases. If you're familiar with Yukon, and if you've heard other companies talk about their deposits there, you'll often hear Archer Cathro's named as either the discoverer of the project or having played a very important role in the advancement of the project. I won't go through them all, but a number of them are listed there. Archer Cathro acts as a project operator in many cases, and as such is obviously very familiar with the regulations in Yukon, but also has a very strong social conscience and has demonstrated that environmentally it's very sound practices. In fact, there's an award that's made every year in the exploration industry in Yukon. It's called the Lecky Award. And Archer Cathro has been awarded that prize 4 times since 2000. No other company has received that award more than once. Okay, where do we stand right now? We've got about 87 million shares outstanding. That's down from a peak. You'll see in a moment that we've been buying shares back on weakness. We have about 92 million fully diluted. Our working capital, as we said before, is about $38 million at present. That fluctuates with the variations in the various shareholdings, and our market cap is 33. Management holds just under 18%. Tocqueville has 12%, and Condier Partners out of Dallas has got 13%. Very strong share support, and as you can see, our trading pattern has been very stable for the last year or so, starting to just come up now with the stronger gold prices. Okay, that's a longer term chart. As you can see, back in 2005, we were trading down, or our market cap was down at a very low level. The dark line is the market cap. The blue on that is the value of our shareholdings, and the yellow is our cash position. As you can see, we've always maintained a very strong cash position. Share values have fluctuated greatly, peaking in the 2011 bull market. You can see our market cap has had two recent peaks. It gives you some idea of the kind of volatility and upside that we have in a strong market. We think we're just starting to see the first inkling of the next uptick. Oops, sorry about that. We'll go back a bit here. No, okay. Okay, the areas in pink are the areas where we bought back stock. We bought back a total of 7 million shares, mostly where we were trading below our cash position. So we've been able to take stock out of the market rather than take dilution. Okay, we mentioned that we have a number of share positions in other companies. Really noteworthy, Rockhaven Resources, we have 47%, they're a subsidiary. If you buy a share of Strategic right now, you're getting half a share of Rockhaven as well, very well leveraged. They're a junior explorer working on an advanced project in the Dawson Range in Yukon, high-grade gold and silver. Very good leverage there. TAC Resources, I'm sure a number of you have seen their presentations. We were one of the early groups to invest in TAC. Actually got all of our money out of it a couple of years ago, but still have an 8.6% interest in the company. They've made a major Carlin-style discovery in Yukon. Also interesting, Precipitate. Precipitate's a company that we were able to buy on weakness in this last part of the cycle. We're a large explorer in the Dominican Republic. We hold warrants there that for $1.2 million, we can be in a 41% position on their discovery. Very, very good leverage. Silver Range, over the weekend, it was announced that I had stepped down as CEO and president, replaced myself with Philip and Mike Power. Mike has been working in the Northwest Territories in Nunavut for a number of years. And we intend now to shift the focus of that company away from zinc silver in Yukon and toward principally gold, with the main attention to Nevada, Nunavut, and Northwest Territories. So again, we've managed to leverage our investment. We're getting focused management in each of these companies that's independent of our management. We're willing to, or able to, use their efforts to really build our company. Won't get into all the others. We have a couple companies are working in Ontario, again, project generators, and we have investments in 33 other companies down below there. We're the largest claim owner in Yukon Territory. Yukon has been ranked by the Fraser Institute as the #1 exploration jurisdiction in Canada, especially geologically. An interesting note there is that more gold has been found in the last 10 years in Yukon that was found in the previous 100 years. It's a jurisdiction that was largely overlooked for a number of years, and it's turning out to be very, very productive at the present time. Won't get into it in detail, but our claims, our wholly owned claims are shown in red, scattered all around the territory. Attack resources are in green. The Claza project of Rockhaven in orange, and Silver Range's Yukon projects are in blue. Very, very broad suite of metals represented in our portfolio, including base metals, specialty metals, but the main focus, again, is on precious metals. That's our performance over the last number of years. Again, the light gray here is the total number of projects that we have, that we own. All of our projects except 3 are 100% owned by the company, no underlying royalties. There's 3 companies with small royalties attached to them. None are under option. All are held for a number of years. In fact, one of the things we like about Yukon is it's a jurisdiction that's relatively easy to maintain your claim position. We have about $8 million worth of assessment credits built up toward future work. That means that we can hold our claims anywhere from 5 to 20 years without doing any work on any of them. So we're in fantastic shape. The blue shows the claims that we had under option. You can see that as we go through different cycles, the blue comes up really dramatically, drops off, goes up dramatically, drops off again. That just reflects the level of activity. As a project generator, we don't want to spend our own money and take the risk of drilling where we don't have to. The idea is we either sell our option, some or all of the projects, to other companies, let them take the risk. We maintain some of the blue sky either through share interests or through the royalty interests. It's a simple model, and it's worked very well for us. We've been able to build up our resources very well. The dark blue are royalty interests. Okay, so what have we been doing in this last cycle? Well, first of all, we do exploration, but at a low level. Our typical budgets are about $2 million per year. Almost all of that work goes in early stage work, getting projects ready to drill. Right now, we've got 24 projects scattered around Yukon territory. The focus there is to try and get projects that are near infrastructure, if not directly road accessible, certainly near roads. We want them to be near power, near existing mines. And the idea is to have them ready to drill, not only geologically, but also from the point of view of permitting. We mentioned we have 24 projects that are currently permitted. That doesn't mean, a few holes. That means everything that you need to get all the way through to production. Most of those permits are anticipating somewhere between 100 and 300 drill holes. In Yukon, you don't have to specify the exact site. You specify a general area for exploration. So if a discovery is made, you can progress extremely quickly from the early stage discovery to a major drill program. And again, this is something we're willing to offer our partners. Okay, that's looking at a typical life cycle for an exploration project. I'm sure you're well aware of it. Strategic focuses in the early years of exploration. That's our generative phase. Very low expenditures, get a project ready for the drill discovery. What that allows us to do, like all speculators, we're able to take advantage of that really strong appreciation that generally results when a discovery is made. That's why we take the shares from a lot of the companies that we option projects to. We're able to capitalize on that sector. Typically, the pricing of a company will peak when discovery is made and is becoming bounded. As soon as the company starts to find the edge of the deposits, investor interest usually starts to wane. We see the speculators leaving, and you get into a period of quiescence as you move through development. That's the second place that we come in. We're able to use our cash to buy shares in companies that have been projects that have been largely de-risked, and where we can get a sizable share interest. We don't want to control the companies, but we can make investments and then cash out when they move toward production and meet that second spike in pricing. An unusual artifact of the period of time we just went through is because investor interest dropped off so much in exploration projects. Many discoveries were made in 2011, 2012, and didn't get that run up in price. We were fighting macroeconomics. The share prices fell across the board. And so we were actually able, in the last few years, to buy shares in a number of companies that had made very substantial discoveries, and the market hadn't appreciated. What we're expecting is that this run-up has been delayed, and I think that that's what we're just about to see. I think you're going to see a broad increase in share prices in junior mining companies, and we are very well positioned to take advantage of that. It's a simple model, but it's worked for us in the past, and I see no reason why it won't work in this cycle. Okay, looking forward, what's strategic done? Well, we've demonstrated through a number of metal cycles that we can pick up good projects at very low cost during times of market weakness. And then we capitalize on those projects when things turn around. It's buy low, sell high. It couldn't be simpler if you tried. But the key on it is to actually show that you can implement on it. And we've been able to do that unlike many of our peers. Second thing, our current pricing is very value orientated. We demonstrated that we're essentially trading at cash and market value. There's no valuation in it right now speculatively. There's no valuation for our mineral exploration projects. There's no valuation currently for our royalty interests. We don't see a lot of downside risk in the company, but we see a huge upside. Next, the strategic is highly leveraged to the exploration cycle. We've been in a situation here where for 5 years, 4 years, there's been no exploration interest. There's been nobody no large-scale investors who've wanted to be in the gold space or in the exploration space. That's turning. I've been lucky enough in this industry to been looking at projects and involved in exploration for 45 years. I've been through a number of these cycles in my career, and my experience has been that they all come back. It's you've never seen a cycle yet where the industry has just collapsed forever. And the longer we're down, the farther we come back, the better the rebound. And I think we're poised for a major run again. And finally, we believe in patient growth and great risk management. We don't want to put all of our eggs in one basket. That's the problem with most exploration companies, is their speculation. Until you can come very, very close to the prize, but if you miss by a little bit, there is no payout. We're taking a different tack. We'd rather not put all of our money into one development project that might fail. We're spreading across a wide range. And again, we're quite prepared to cash out our share interests in companies if we see that they're not successful. It's a model that's worked, and it's a model I'm confident will work again. Anyway, thank you very much. I know it's a little bit shorter than a lot of presentations, but I don't feel there's any need to continue.
It's 10 o'clock. You're on time, so thank you very much. So a good hand of applause.